Asia's financial system is on track to be bigger than the US and Europe by 2030. That's according to a new report by ANZ Bank. For the Wall Street Journal, I'm Enda Curran. I'm joined by the Chief Executive Officer of ANZ Bank, Mike Smith. Mike, can you explain to us why you think Asia's financial markets are going to deepen and mature the way your report outlines?
Well, what the report basically is outlining is the opportunity, it's the potential of what is there. Over the last 2 decades, 3 decades perhaps, as these economies in Asia have grown, they've fundamentally been financed by intermediation to the US and to Europe. And what we believe will happen is that there will be a fundamental shift where Asia will become responsible for financing Asian growth of the future.
And you're confident that Asian companies will have capital markets where they can issue debt or issue equity in local currency around the region?
Well, that's going to be the opportunity. I mean, the key to this is to ensure that countries within the region embark on a reform agenda and a deregulation of the financial systems in each country to enable this to happen.
But is that reform agenda going to proceed quickly enough to match your study? For example, you mentioned 2030. A lot of work to be done clearly in places like China.
Yeah, absolutely. But China is one of the places where that reform is clearly front and center of what they're doing. They do understand this. They get it. So I think that there are other countries in the region that are probably going to go slower than China.
What's the biggest obstacle then, in your view, to Asia's capital markets developing? What's the biggest problem ahead?
Well, I think it is just that that issue of actually making or ensuring that that reform does happen. It's not easy, and of course, you know, the problem is that if it doesn't happen, you do fall into that middle income trap. And we've seen examples of that around the world. So I think that's the biggest problem or potential problem.
And what about developing the equity and debt capital markets at the same time? Because we know in one case, Australia is a great example. It's a very deep equity capital market, but its corporate bond market is still quite small compared to where it should be. How can the two go in tandem?
Well, they can. I think the issue with Australia is that the fixed income market has not grown the same way because it doesn't have the same tax effect on an investor. The superannuation or pension fund business has grown because of the tax relief that that investors receive. So, of course, one has grown much faster than the other.
Well, that's a clear policy trap that policymakers will need to avoid then, I guess.
Absolutely. And these are the sort of things that have to be thought through, because you can get a system which becomes unbalanced.
Well, you know, we talk about developing Asia's capital markets, but in this past week we've seen Alibaba, huge tech giant, announce it's not going to list in Hong Kong. Every other day we see Chinese corporates and other corporates, Australian corporates, borrowing US dollars. Are you confident we'll reach a point where those Asian corporates won't need to leave the region? They can fund themselves here?
Well, again, as I say, that is the opportunity. That's the size of the prize. You know, it is just a huge, it's a huge opportunity, and there's no reason why that shouldn't happen. Quite clearly, the renminbi in the longer term must become a trade currency. It has to. But of course, before that happens, it has to become fully convertible. And before that happens, you have to deregulate interest rates. And so there are a series of steps to all of this.
And quite a few major steps.
Oh yeah, indeed.
The movement of the yuan.
Well, you know, it wasn't meant to be easy. You know,
not overnight.
Nobody's saying it's easy.
The movement of the yuan in the last few weeks.
Yeah.
Is that a good thing for the market, or a reminder that it's not a one-way bet, or is it a sign that China can still cause so many unknowns and problems?
Well, you know, I think it's what could be expected by a more market-driven pricing mechanism. Obviously, the band adjusting, you know, it has created flexibility. Before, you'd have actually said it was pretty inflexible. In fact, it was probably a one-way bet, which it was for everyone. And quite clearly, that's unsustainable.
That's what they're trying to turn around, that message.
Yeah, I think so. You know, into the extent that you can't just rely on it being one way. You know, it has to have that flexibility.
All right, deeper Asia capital markets good for ANZ Bank, I assume. Is that the reason behind the study?
Well, in the sense that the opportunities for financial services are going to increase. Of course, that's good for ANZ, but it's good for every other bank in the region too.
Great. All right. Thank you for discussing your report, Mike. Okay, for more on the ANZ report, go to the ANZ website. For the Wall Street Journal, I'm Enda Curran.